the S Corp's basis, and the AAA account. Last sim. So this is the last concept in S Corps, guys. Okay. A and B are equal profit sharing partners at Wakefit. Wakefit has always been an S Corp. Wakefit has book income of $66,950 for the year, which is year 3. B's beginning stock basis is 10. Wakefit's beginning AAA account is $25,000. For each item in column A, calculate the requested information and enter it. Again, all of these are the most difficult questions, guys, because I'm not giving you any drop down. I'm asking you to fill up everything. So any lacuna in your concepts will become glaring. There. Okay, so I just know my beginning book income for year 3. I have to calculate Wakefit's ordinary business income, the ending stock basis for a particular person who started with 10. So I know this has to increase by my share of the profits, both ordinary and separately stated items. And I also need to know because of the operation of the business, since my accumulated adjustment account. So accumulated adjustment account is the total of profits generated by S Corp during the year. Okay, so it is generated by S Corp since its inception. So since its inception, what is the profit that S Corp made less of distribution? So what is the balance lying in the accumulated adjustment account? So they have asked you to calculate the ordinary business income for the entire business, which is the S Corp. They've asked you to calculate these ending stock basis, and they've asked you to calculate the AAA account for the S Corp for the year. Okay. Can I think of you guys giving me this data? Yes, no. Can you think of giving me this data? So just the first thing that you do when you get this sum is to put this data into the format, which is SSI versus ordinary versus non-deductible. Sale is ordinary, tax exempt is special interest item. Remember, it does not matter whether the item that is separately stated is non-deductible, deductible, taxable, non-taxable. We're not bothered about that. That will just pass on to the S Corp member and he or she will remember. What about depreciation recapture, guys? Is it ordinary? Is it ordinary? Always remember depreciation is given to the business. So even the recapture would be taxable in the business hand. Neither the depreciation nor the depreciation recapture is an SSI. So this is ordinary. Dividend income is separately stated item of income. Key employee life insurance proceeds received. Key employee life insurance proceeds received. Short-term capital gain, I know, is separately stated item. Yes. Key insurance life policy received. How much is that? 7,500. Ordinary or separately stated? Definitely not a part of my normal business income, right? So separately stated item. Separately stated item. Cost of goods sold is ordinary. Salary paid to be is ordinary. Rent expense is ordinary. Supplies is ordinary. G&A is ordinary. Charitable contribution is separately stated item of expense. Premium paid on key employee life insurance policy. What is this, guys? What is this? Ordinary or SSI? Please remember, SSI. Please remember, this will again be separately stated item of expense. Non-deductible, passed on, and then you decide what you want to do with this. Is that clear? I think this is it, right? So first, what are we supposed to calculate? What is the partnership's normal business income? Yeah, Mitali, what is your question?
Mom, the insurance premium paid for the life, like for our key member. Why it's a separately stated expense, not ordinary? Because like premium on life insurance is the ordinary expense, no?
No, oh, you're taking it from the partnership perspective, right?
Oh yeah.
I am not see whether the partnership is a beneficiary, whether the partnership is not a beneficiary. Is it a business expense?
Okay.
Not a business expense. You push it because it's deductible, non-deductible to a certain extent. You push it and later on you see what you have to do with it.
Okay.
Okay?
Okay.
Just calculate your total ordinary gain or loss. Just give me the figure.
Okay.
Anything not to do with the core business of partnership for which the partnership was formed is separate. You know, you're going to deal with it separately.
Okay, ma'am. So always a premium is a separate, right? I have to remember. Okay.
Premiums only if it is a complete business related expense, you're going to take it as a business expense or a business items of income. Else you're going to just separately take it.
Okay, ma'am. Thank you.
Just calculate this and tell me what's the out of this 56,950, if you segregate it, my ordinary would be 50. My ordinary business will be 50 and my separately stated items of income and expense net off will be 69. Is this coming? Everybody. Is this coming? Everybody. So now I know the first column 50,000 is my ordinary business income. Now they are saying calculate B's stock basis. So B started with 10,000, right? B started with 10,000. B's income will be increased by B's share decrease with the separately stated. So ordinary item and separately stated item and deductible item and tax exempt item. Everything will increase or decrease B's share. Tell me what would be B's ending stock? Anybody? So I start with 10. I add with my share of, so I start with 10, right? So if I take B's share, so opening would be 10, right? I started with 10. And then I'll add my share of ordinary business income, which is half of $50,000. B is 50% partner, right? Equal profit sharing ratio. So I take half of 50, which is $25,000. Yes, no, everybody. And then I will take half of all the separately stated items. Add, minus. Tell me what is the figure that I'll get here. So I'll add 50% of 1,000. So even tax exempt interest income will increase my basis. So divided by 2. How much is that? Yeah. So just give me the breakup and I will add 3,475. That means my share of separately stated income net of expenses. So again, this is income net of expenses. So I'll add this up and my share of separately stated items. So my ending stock basis becomes 5, which will go here. Everybody, is this clear? Please understand that my stock basis will increase with my share of everything. My share of tax exempt income, my share of non-deductible expense. So increase or decrease will be for everything. Now I'll push it to your account and now you will have to see what you have to do with it. Then I go to AAA account. Can you guys calculate AAA account and tell me what will be the figure for AAA? I start with 25,000. Okay. So I start with 25,000. Then tell me how will my AAA account reflect? This is only business. Okay. This is only business. So my AAA account had the beginning balance of how much? 25, right? Of $25,000. This I'll add total ordinary income that was generated by the S Corp, which is $50,000. That is what the S Corp generated. Now, my AAA account typically means that figure. Now, how many people remember OAA account? Mitali, I think now something is hitting. Mitali.
Yes,
Do you
ma'am.
remember OAA account? We said other adjustment account, I will take away the Keyman insurance policy and the proceeds and I will put it in a separate account called other adjustment account. Do you remember that?
Yes,
That's
ma'am.
the
I do
reason
remember.
out. That is the reason part for ordinary business income.
Yes, ma'am.
So when I
Got
talk about it will not include this, it will not include this.
it.
That means it will only include dividend income
Hmm.
and it will include short-term capital gain. So it will include specially stated items of income, which is 550, that is 4,650. And out of separately stated item, it will not include key life insurance premium. They will only include 1,200. So minus separately stated item of expense, $1,200. Just calculate and tell me the figure here. So it's 75. Yeah, this will be minus, okay? So 79, 78, 450. Is this coming, everybody? The reason why we are not taking Keyman life insurance policy proceeds and premium because there's a separate account, which is other adjustments account, which has to deal with this. So if you go to the theory very well of what we did, this is a figure that will come here, which is 8. Is this clear to everybody? Today was a big session. The only reason why we could finish it in 2 hours is because we had less number of people. Each of these questions are very, very important because basically I'm wrapping up the entire conceptual areas of gross income, C Corps, partnership, and S Corps as it is relevant for our SIMS in the exam. Sunita, 1 second. See, when it comes to AAA account, we have to think from the perspective of partnership as a whole, right? So we start with the beginning balance. We add the share of ordinary income. Ideally, I should have added all of SSI, reduced all of SSE. But I know that for Keyman Life Insurance, I have a separate account, which is other adjustment account, which will include everything for other adjustments here. So I will remove this 7,500 and this 5,000. and I will add all the other items of SSI, which is 550 and 4100. And here it will only include charitable contribution because
1,000 is also there. Na? Tax exempt interest income is also there.
yeah, but that will not add my AAA account, right? Why?
Okay.
Because it is not taxable, right?
It's exempt.
It is not taxable, right? So this is not the figure that can be added to your AAA account because it's tax exempt, right? Have you understood? See, it is the amount in tax that can be added or that can be given to the shareholders, right?